The requisitioning department must identify its need on strong rationale and should be able to justify. The requirement can be fulfilled either from internal or external sources. The material or services may be one that needs to be reordered, or it may be a new item or being revised after lapse of longer period than required for reordering. Selection of the right product and vendor are critical for the company. Some industries have standards to help determine specification with pre-qualified vendor list. But it never means to close the door for newcomers. It is always important to be in touch with new vendors, products, and technologies. The company may specify the necessary product by using identifiers and technical points. The business needs to determine all possible sources to obtain the product. The company might have an approved vendor list. If not, the business will need to search for a supplier using various resources through market visit, internet, sales representatives, directories, and many more. The company needs to qualify the suppliers on predetermined criterion before enlisting them and awarding a contract. The procurement department will investigate all relevant information to determine the best price and terms for the organization. Negotiations are considered as the very basic job of a procurement manager after sourcing. Good negotiations do not always end up with the cheapest cost, but acquiring the best cost of ownership of required quality on or before time. The purchase order or contract is used to buy materials and specifically defines the price, specification, terms and conditions of the products or service. It also covers additional obligations, if applicable, on one or both the parties, such as late deliveries or late payments. The purchase order must be delivered, usually by fax, mail, personally, email, or other electronic means. Sometimes the specific delivery method is specified in the purchasing documents. The recipient then acknowledges receipt of the purchase order. Both parties keep a copy on file. The expedition of the purchase order addresses the timelines of the service or materials ordered. It becomes specifically important to avoid delays through appropriate correspondence and finalized handover or takeover processes between two parties. The issues mostly relate which payment dates, delivery times, and work completion according to specification and schedule. Once the vendor has delivered the product, the company needs to accept or reject upon receipt. Acceptance of the items obligates the company to pay, while rejection entails replacement by vendor or cancellation of order. Three documents must match when a vendor requests payment: the invoice itself, the delivery challan, and good receiving note. The numeric agreement of all these documents authenticate completion of transaction from both the ordering company and vendor. In case of any discrepancy, it must be resolved before the recipient clear the bill. Usually, payment is made in the form of cash, check, bank transfers, letter of credit, or any other types of electronic transfers. In the case of audits, company must maintain proper records of all transactions which take place in procuring material and services for the organization. These include purchase records, purchase requisition to which reference purchases were made. The working paper include comparative statements and approval from approving authorities. Records also need to ensure compliance with organizational policies and procedures. Before evaluating your suppliers, defining your metrics based on criteria that are important to your business can be a vital first step. Some metrics you might try to track include the number of on-time deliveries, average price, or number of defects in products received. Each of these performance indicators can help you compare different suppliers. You can also consider other metrics, like if vendors have available feedback channels and existing customer reviews, to understand how receptive they might be to your changing business needs. This process is to identify supplier evaluation criteria such as cost, quality, and on-time delivery, which are the important primary critical criteria that affect the buyer. However, the critical items the supplier's in-depth analysis related to their process capability or machine capability and ability to do a business is essential. For these reasons, more supplier evaluation study is required. The performance categories having weight reflect the relative importance of that category. The total of each weight must equal to 1.0. That helps the management during the supplier selection and evaluation process. In this, first identify performance subcategories within broader category in which the total sum of the subcategory weight must be equal to the total weight of the performance category. Scoring system takes criteria that may be highly skewed and develops a quantitative scale for measurement. The scoring system is effective if different individuals can fare and score the same performance categories under assessment. For illustrative purposes, an example is a 5-point scale, where 1 is poor, 2 is weak, 3 is marginal, 4 is qualified, and 5 is outstanding. A buyer can compare the scores of different suppliers for the same order and select one based on the evaluation score. It may be possible that supplier does not qualify at this time for further purchase consideration. Purchaser should have minimum acceptable performance necessities that suppliers must assure before they can become part of the supply base. The major output from this step is a proposal about whether to accept a supplier for a business. A buyer may evaluate several suppliers who might be competing for a purchaser contract. The intention of the evaluation is to qualify potential suppliers for current or future business requirements. An award recommendation always comes after all the bids have been evaluated and the contract owner and the contract team have agreed on the most acceptable bid for the work requirement. In effect, it is when the contract owner, with the support of contract support team, recommends that the contract be awarded to the specific bidder or bidders. Once management approves an award recommendation, the contract holder liaises with his contracts support team to notify the successful bidder in writing of the client's intention to award the contract to him. With this in place, the contractor has enough time to fit this new work opportunity into its work schedule or reject the contract award. A contract or agreement is a mutual agreement between the buyer and the seller. A legal binding contract will have an offer, an acceptance, and sufficient consideration for both the buyer and seller. The contract, once finalized, will include the detailed statement of work and other terms and conditions. Measuring your vendor performance is a critical step. Measuring vendor performance gives important insights on time deliveries, late deliveries, defects, and delays. These statistics can shape decision making on supplier selection, contract termination, and contract renewals.